Meanwhile, Wipro also announced its third quarter earnings, which were in line with our estimates. But let me give it over to Rima now, who will take us through more details. Rima.
Well, it was largely in line with expectations. Q3 dollar revenue growth has come in at 2.9%. The company has guided for a Q4 dollar revenue growth, which is anywhere between 2 to 4%. But this includes an acquisition that they had done. So if you strip it out, that very roughly, that's not quantified by the management, the street expects the organic guidance could be around 1.4 to about 3.4%. Here's the reaction that analysts had. One, they said after significant revenue underperformance compared to its peers for the last many quarters, this time around Wipro's growth is at the middle end of its peers. That's because it's a dollar revenue growth of 2.9%, close to TCS, which delivered about 3%, and it's better than Infosys, 1.65%. So that's the word on the dollar revenue, and margins as well have managed to improve. But let's get in. The management and pose all these questions. Joining us for a CNBC TV18 interaction, we've got TK Kurian, the CEO of the company, Suresh Senapati, the CFO, as well as Saurabh Govil, the Senior Vice President of HR. Good morning, gentlemen. Thanks so much for taking the time out and joining us. TK, here's the first question to you. Wipro has seen multiple quarters where it has underperformed its peers on its growth. This time around, as we pointed out, it's one quarter where you have delivered growth, which is in the middle range of your peers. So is this a start that Wipro has caught up on the sector average, and from here on, you will be delivering industry growth averages from this quarter on?
So Rima, it's pretty simple. Last quarter has been for us a quarter of execution. We laid out a strategy for ourselves many quarters ago, where we basically said that our fundamental strategy is going to be differentiation in the front and standardization in the back, which really meant that at the back we need to drive increasing productivity, and on the front what we need to do is we need to make sure that we are able to kind of differentiate enough to get value for our services. To some extent, we've seen that kind of playing out this quarter, and the results kind of reflect that. Next quarter, our guidance again reflects growth. So overall, if I look at 2014-15, sitting where I am, I'm certainly more bullish about what's going on in the marketplace than I was the same time last year.
That doesn't answer my question. Has Wipro finally caught up on the sector average and will deliver, sector averages in terms of growth from here on? Is that what we can expect in FY15?
Yeah, typically our guidance is only given for a quarter. We don't give a full year guidance. To that extent, I wish I could answer that question without getting jailed without going to jail as far as the SEC is concerned. So our guidance is a quarter, and I would suggest you just read nothing more than what we are kind of giving you, which is a quarter guidance.
Okay. Suresh, your margins at 23% are the highest that we've seen in the last close to about 3 years. In your press conference, you said that margins are stable but with a positive bias. Can you quantify what this positive bias is? Can productivity-led gains inch up your margins, say, to a 24% or a 25% in the next few quarters?
The reason we say that is that you would have seen that while our margins has improved significantly, and based on the effort that we have taken in terms of driving productivity, creating a lot of intellectual property which is able to help us to reuse and drive a lot of automation, I think the journey is work in progress and much more to happen. And also we know that there is competitive pressure in the marketplace for us to be able to make sure that we save cost to be able to not only fix some margin expansions but also give it to the customer organization to be competitive. And we are not necessarily the best operating margin so far in the industry industry peers. So consequently, we think there are enough levers that are available for us to work on to be able to have a positive bias. Should it be in next quarter or 2 quarters? Can't say, don't want to say. But in the medium to long term, we think there is an element of positive bias around it, particularly in an organic growth point of view.
Suresh, speaking about levers, your utilization still stands at close to about 74-75% as of this quarter, which is much lower than what your peers are. Some of your peers are operating in utilizations at 80-84%. For multiple quarters, they managed to sustain it. What would be the target utilization level that you're at least aspiring to have in the next 2 or 3 quarters?
So Rima, it's pretty simple. I think what happens is, sitting where we are, we think we have enough headspace to kind of grow that. And the focus would be to bring that back into the average of the industry. Because today, and that extent, what it means for us is that the minute we improve our utilization, Senapati talked about an upward bias of profitability, and that's really where all that is going to come from.
Okay. TK, what Suresh also said is that, margins with a positive bias, but he also used the word on an organic basis. You all have recently concluded an acquisition, this Opus CMC. Could you tell us what the margins on this Opus CMC were in calendar year 2013?
So we don't break out the acquisition margins separately. As far as Opus is concerned, Opus used to be a customer of ours on the BPO side of the business. And we used to do a lot of offshore work for them. We continue to kind of believe that there is far more opportunity to kind of reduce cost at Opus and improve margin. We don't see Opus being significantly dilutive as far as acquisitions are concerned.
But it could be marginally dilutive. If not significantly margin dilutive, Opus could be at least marginally margin dilutive. Is that what we could understand?
Yeah, but even with Opus, Rima, we don't see the margin changing too much. I don't think you should expect a negative bias as far as Opus is concerned.
Let me get Saurabh as well into this discussion. I know why you have indicated that while your headcount has declined for the last 2 quarters, and you have said, from here on you shouldn't link headcount, directly to your revenues. But could you give us any color on what the hiring could look like or the net count addition could look like in FY15 when demand is picking up?
So, let me just take a step on the recruitment piece. Our recruitment is on as per plan. We've gone on campuses, we've made our offers, we are onboarding people whom we had offered last year. We will continue to hire as far as, based on the guidance we have given for the next quarter. Our bias of hiring people on site has gone up very clearly. So that is very clearly on as per plan. We don't guide for a full year number from a hiring perspective, but what we see from a hiring point of view is what we have hired so far, and we move forward is as per plan going forward. But you have to take the entire supply chain thing, the entire hiring plan, as utilization TK spoke about, as well as the attrition. I think all these three put together would be deciding on how we move forward. And we see headspace as we spoke about on the utilization side. So I think it's on plan, on track as we move forward.
So I'll just kind of just give you a simple answer to that. Our headcount last year that we hired in India and what we expect to hire this year would more or less be stable. We've not changed or delayed any of the dates on which people have been onboarded. We continue to believe that nothing will change next year also. But there is going to be a fundamental shift in terms of our hiring. The kind of hiring that we do in India, the similar kind of program is going to be launched in the US and in Europe. Because we truly believe that long term, we have to be more local in the geographies that we work in. And more importantly, from a supply chain perspective and from a customer demand perspective, I think the customers are demanding that. So on-site hiring is going to be certainly a big area of focus going forward.